If you're not a government employee, there is still an opportunity for you to gain assistance in order to purchase your first home. This allowance used to be called Flisp, but is now currently known as First Home Finance. Whether this concept is new to you or whether you already know something about this government assistance, in this video, we're going to look at the intricacies of how it works and show you how you and your loved ones can benefit from it. I'm Sebolelo, otherwise known as Sebolelo the estate agent, and welcome to the channel where you'll get little tips to make your first home buying experience a little easier. I'm sure you'll agree with me that that's reason enough to subscribe and be notified whenever there's new videos. In order to qualify for an RDP house, one of the requirements is that the household must be earning between 0 and 3,500 Rand a month. While that's still a large number of people, it left a large gap for the middle income earners who were struggling to find financing to purchase their properties. And that's why Flisp was introduced in 2005. The term Flisp actually stands for First Linked Individual Subsidy Program, but that name has been changed to First Home Finance, which amongst other things, it's easier to remember. But seeing as it's now called First Home Finance, that's what we're going to refer to it in this video. So let's first start by looking at what first home financing can do for you and how you can benefit from it if you're trying to get into the housing market. First Home Finance generally gives out a subsidy that you can use as a way to purchase your property. How much you qualify for will depend on how much you earn. The money is generally used for transfer costs, which is probably the place where we struggle the most when it comes to purchasing our first property. Because if you're going to be buying a house of like 650,000 Rand, you're looking at transfer costs of about 55, maybe 60,000, and you would need to come up with that amount in hard cash before purchasing the property. So if you can get assistance with that cash injection, it can really make a difference in how quickly you can become a homeowner. The subsidy amounts range from about 38,000 to about 170,000, and it's worked out on a decreasing scale. So the more you earn, the lower your subsidy amount. The first part of the assistance is generally used for transfer costs, and I'll tell you why I say generally in just a moment, but then the rest is then used for deposit. Remember earlier in this video, we spoke about that house for 650,000, and for round number purposes, let's say the transfer costs were 60,000, but the subsidy amount is 90,000. So 60,000 will go towards the transfer costs, but this 90,000 will then go as deposit. So in other words, they're not going to transfer the money into your personal banking account. If you want to know more about deposits and how they work to your favor, check out this video that I have recorded. I will add a link at the end of this video so you can watch immediately after watching this one. In this example, should the client themselves have managed to come up with a transfer cost of 60,000 Rand, they're not going to forfeit that subsidy. All that means is the subsidy of 90,000 Rand goes all the way into the deposit as is. No matter how much you qualify for, you will still get your subsidy. Even if you buy your property cash, you will not be penalized or lose out on any of that amount of your subsidy. So let's look at who qualifies. Number one, you must be a South African citizen and hold a South African ID. Number two, you must be 18 years or older, otherwise you're not old enough to enter into a contract. Number three, you must earn between 3,501 Rand and 22,000 Rand. If you earn 3,500 Rand, then you qualify for an RDP. So it needs to be 3,501 Rand in order to qualify into the category of first home finance. When I say you, I mean your household. If I earn 11,000 and my husband earns 13, then together the two of us make 24, right? Which means we fall out of the category of first home finance, provided of course that we are married in community of property. Because once you're married in, you are now one entity, which means you cannot apply individually. If you are part of a couple that is either not married or married out of community of property, even though the two of you might earn that 24,000, one of you can apply individually. So the one with the 11,000 can apply, or the one with the 13,000 can apply. But then you can do it separately because then it's one household because you are not interlinked. Number 4, you must be a first-time homeowner. If you maybe bought a house with a husband or a wife, but now you're divorced, you do not qualify for somebody in first home finance because you've already owned a home. If maybe you had a relative or a friend, even somebody who passed away and left you fixed property, you do not qualify for first home financing because you are or have been a homeowner even though you did not purchase that property. Number 5, you should not have benefited from a government subsidy. So say you were at some point earning 2,000 Rand and you qualified for an RDP, you can now not apply for assistance through first home subsidy because you've already earned benefits from a government subsidy. Number 6, you must have a financial dependent. That could be a child or an elderly parent or a spouse. However, this dependent must not be benefiting from a government subsidy. You cannot say you are financially supporting Ugogo when she was awarded an RDP in the suburb next door, which she is now renting out and earning herself a bit of extra income. Even if she had an RDP that she has since sold, you cannot claim her as a financial dependent. Or maybe you're saying Sebolelo is your financial dependent. Maybe she's living with you, but at some point Sebolelo used to work, and when she was working, she took advantage of the first home finance subsidy. So again, she doesn't qualify. You get the idea. If you qualify for all of these basic requirements, you are able to purchase a property using the first home finance subsidy. You can buy a freehold, you can buy a sectional title, you can buy in a new development. If you are confused about which of those to decide, I have recorded a video to help you make that decision. I'll put a link in the description and add a link at the end of this video as well. You apply for your bond as you normally would, but then when it comes to your pre-qualification, you will know how much you qualify for. Then they will add those numbers in order to see how much you would be able to buy for. So you would hand in all of your paperwork along with the offer to purchase to First Home Finance. I do know that there are some agents and bond originators that can help you with First Home Financing with that application process. However, I do know that there also are some agents that are not allowed to help. So it'll depend on who you're working with and what the policy of that company is. I'll add a link to the First Home Finance website in the description so you can just read through it and get an even deeper understanding of how it works. It'll also give you tables to show who qualifies for what when it comes to amounts. And if there's anything you want to know between now and purchasing your home, it'll give you contact details of who you can contact about that too. I personally think First Home Finance is a game changer and that it can make a massive difference in our lives as South Africans as we strive to become first-time homeowners. Here are those 2 videos that I told you about. The one is the benefits of a deposit, and the second one will help you decide whether you want to buy in a freestanding house or in a sectional title.